Good afternoon, everybody. Welcome to Friday Drinks on a very warm and sunny autumn day. I'm glad to be here. I'm glad it hasn't been that cold. Usually in May it gets really chilly.
Yeah.
So I understand that it's going to be a warm winter.
Yeah.
Something to look forward to.
Fantastic. Absolutely. Yeah. I like it.
Last
year was actually really cold. It looks like this winter is going to be much better.
Yeah, I'm looking forward to that. How was your week?
Hey, I certainly hope so too, because I struggle in winter. Look, my week has been good so far. Look, we're just trying to keep pushing, and create some value. You can't be looking around and get worried about the headwinds that you can't control. So you just have to create value within your small micro economy.
Indeed, it is what it is. But let me tell you something that happened to me this last week, which I found quite interesting. Well, I thought you guys will find it interesting, and certainly the audience will find it interesting, because we've got Fuko Maheo from Dairy Board all over the bar. We've invaded the bar, and with this lovely Fuko. So what happened during the week is I went to a supermarket, something that I must admit I need to do more of, but I haven't done so. But anyway, I was looking for my hair, because last time when we had my hair, I actually loved it. So I tend to buy it, once or twice a week, and I have it. And then I realized that they've got a new flavor, ginger. Did you know about this?
No, it's actually got to be introduced to it fairly recently, and obviously because on that aspect I tend to be more old school, going with the traditional flavors.
Okay.
But when I tried it, they are like, okay, something different that might capture a market for those ones that are not really used to the referrals of this world, and your typical 6-year-olds. But also, it's got a very nice ginger taste. Like they're saying, it's.
Well, this is my first time actually trying it. They've got different flavors. So they've got, the traditional that you're used to, but they've got buttermilk and banana. Have you tried any of those? Okay.
I'm not really a Maheo person, but I quite like this one.
Yeah.
The ginger flavor.
Okay. What is it about it that you actually like?
I like the texture, with the little, bits of grain in it, and it's there's something quite unique about it in terms of like it's unlike fizzy drinks. It's got a unique flavor and taste profile.
Well, I think especially for winter, the ginger is certainly most welcome. I can smell it, which is great because I love ginger, right? And this is my first time tasting this, So let's try it, and I'll tell you what, I'm very honest with my opinions, people at Dairy Board. So trust me when I tell you whether it's good or bad.
Yeah.
I don't know whether we should.
So I was worried about trying something new on set.
Okay.
So I had to test one just before we...
And...
Yeah, look. Then I was like, okay, maybe I can have another one. So it's quite.
It's good.
It's good.
I quite like it.
You can actually taste the ginger, like it's natural ginger. So I suppose you then get all the benefits of ginger.
And it's not too much. Like I was.
It's not overwhelming.
Yeah. It's not like the overwhelming taste of ginger that can get. You just okay, this is too much. So it's something that.
Well, let us know what you think. Try out the new ginger, buttermilk, and banana that they have, and please tell us what you think. I quite like this. Let me have another taste. Certainly better than whiskey.
Look.
Seriously.
Wow. They're different. You can't compare the two.
It's like 50 cents. How much was your whiskey?
I don't remember when about this.
But please go ahead. You're gonna desecrate your hair with
I'm not desecrating anything. I'm actually being a good sport. I normally don't have soft drinks on the show. I normally have something much more interesting. And but I'm definitely going to humor the sponsor and have some of their fantastic product. But this is a bar, and my preferred tipples are distilled and bottled in Scotland, and today I'm having some Dalmore. Yeah, it's a pity. It's just teetotalers on the show. There's nobody I could share this with. This is really good. It's a
Is
double
it bad
cast.
or it's a good thing? I mean, you've been enjoying ever since George took a sabbatical. You've been enjoying this whisk all by yourself, eh?
Yeah, look, I think it is better if there's somebody on the set that I'm sharing it with that has an opinion as well. Because sometimes I feel like I'm a bit biased. Or it's always good to have somebody with a different perspective to push back and.
Well, I was going to ask you about that because week in, week out, and we've been doing this now for 3 years. Well done. It's actually 3 years on the 7th of May.
Yes.
Right?
Yeah.
So, and we sort of run, 45 or so weeks, right?
Yeah.
And times 3, we're closer to 130, 135. So you've had over 100 whiskeys over that period. And
On
not
set.
once, and on set.
On set.
And not once have you said, this is crap. This, I'm having it because so-and-so bought it, but this is actually not as good as the label says.
Yeah, well, it's because
So should we actually trust your judgment? Because that's really what
'Cause
we're
I
trying
create-
to get.
like-
Your judgment. Now we're worried about your judgment. We don't drink, but we're worried about your
there's,
judgment.
there's thousands and thousands of different whiskies, and I've obviously curated the 100 that I've opened and tasted on the show. So I do have a good nose for these things, and there's the internet as well, right? So you've got people actually much smarter, much more experienced about whiskey than I am, who opine about these whiskeys, and I read their opinions, before I decide what whiskey to bring on the show. So I'm much more likely to err on the side of a decent to great whiskey.
Oh, come on, Shumba.
Yeah, yeah.
Even the great Winky D goes sideways, once in a while.
Yes.
Especially his latest offering. What do you guys think?
I just I managed to listen to the 4 of them, so it's calling it the Love Quartet. So
Apana Sipo.
the 4 of,
Pane Sipo.
the 4 of them. Look, it's they didn't really strike me as on first listening to them, but you see, someone like a Wingy D, you tend to get used to the
His
music sound over time, and obviously I'm a big fan. I tend to be more biased. Yeah,
But he does get it wrong sometimes.
of course, I mean
So-
we
so-
all get
and
it wrong.
We all get it wrong sometimes. So, Rovaro,
It's quite natural.
over 30 weeks,
not saying
over
that he
100
got
weeks,
it wrong here, but just in general, we all get
it wrong. So tell us, you've never tasted one that you thought,
This is horrible.
this is horrible. I've
No,
never had this.
I've actually had a very pleasant voyage, and touch wood.
For 3 years.
Touch wood that
For 3 years.
Yeah,
Every bottle.
I haven't had a horrible bottle. I haven't had a bad experience.
Even the wines.
The wines. Also, the wines. Remember, a lot of the times we have the benefit of Leby's counsel, and we've had some really good wines actually. So we've been quite lucky.
So it's either you're a true connoisseur.
I wouldn't describe myself as a true connoisseur. I'm a student.
You're a student.
I'm an enthusiast.
That never gets it wrong.
No, I get it wrong all the time. In the experiments that I have run off the show.
Okay.
Yeah,
All right. Okay. So by the time you get on the show,
absolutely.
it's something that you're confident in.
100%.
Okay. All right. Interesting. Okay. So, gentlemen, I want us to talk about a number of things. We've had the local currency, ZiG, for almost a month now. And I thought, you know what? Why don't we just do a review? So I'll start with you, Ranga. Maybe you can just give us your, the performance of ZiG, how it is actually performed. Did it live up to expectations or not, or it was otherwise? Just give us your overall.
Oh, so ZiG obviously it came as a big surprise. There's been a lot of talk about a currency change, and after the introduction of gold tokens, and also we then saw some digital tokens that were said to be backed by gold, etc. And then we got the ZiG. And it's something that we've discussed on the show before, that it doesn't look like there was proper planning in the whole launch. So in terms of making it available, so for example, the actual physical cash called notes and coins, they were introduced last week, but they remain fairly scarce. And also in terms of the transacting public, because the economy continues to dollarize, and there are certain areas where the ZiG is not yet acceptable. Just today, some place that I would not mention, we went to buy something. They say they're only going to take US dollars, and then on in the wider economy, one would have expected that the gap between the parallel market rate and the official ZiG rate we're going to narrow over time. That hasn't been the case, even though the ZiG as a currency remain very, very scarce. There's still a long way before we could maybe even dream of having public confidence on the currency. I'm not sure the way the authorities are going about it is the best way. So you wouldn't want to use threats. You wouldn't want it to be backed by the police, people being arrested, or some new measures that are bordering around threatening the public to accept it and to ensure that they maintain the rate at some level. So on that score, it's probably too early, but so far I doubt even the issuers, the authorities are happy with the performance. I don't think anyone would want to use some heavy-handed tactics to try and show up support on the currency, because the moment you do that, you actually get some opposite results.
So maybe, Rufaro, you can come in. Yeah, ZiG has had an inauspicious start, and my question to you is this: is this a public relations nightmare, or there underlining problems with ZiG?
So it's definitely been botched from a public relations perspective. I think that it would have made so much more sense if they had the bankers buy in, and then you actually have them at the vanguard of promoting this to the public, right? And you actually haven't heard the bankers cheerleading ZiG, because they themselves have had quite a lot of issues. I think just switching from the Zim dollar to ZiG, from just that IT transition for many of the banks was a nightmare, which speaks to a lack of engagement, a lack of advanced planning. Typically when changes of this nature are announced in a market, the affected parties are given 30 to 90 days to plan for the transition. So one of the reasons why I think the launch has been inauspicious is the fact that you have this announcement with all these significant changes, and the effective date is literally a few days after the announcement. So a lot of the challenges are just teething problems that the banks have in terms of just transitioning. And then, that the execution of the transition has been poor, and the comms, the public relation side of it has also been quite poor. So you actually then wonder whether a lot of the claims that were made at the announcement, whether they're true. right? Because if US dollars are available at the official rate, which is at a significant discount to what's happening on the power market, then why would anybody pay 18, 19 when they could pay 13.4, 13.5, right? So yeah, look, what I will say in addition though is that and Ranga alluded to this, is that it's early days. If we're still having discussing these sort of problems, end of June or end of July, then I think there will be pundits who will be categorically declaring ZiG a failure.
And given that it's backed by, or we are being told that it's backed by gold, foreign currency, and other valuable commodities, one would have expected that the central bank could have just allowed a portion of that to be available. I mean, people should be able to convert easily from ZiG to USD. I mean, it's only 80 million USD worth of ZiG, and we've got 3 times in terms of the cover of the
purportedly.
Yeah. So if that is the case, just as a way of confidence building measures, doesn't it make sense for them to just say, banks, you can play around with this 30 million, up to 30 million or some other number, where people can literally walk into a bank, get some US dollars, and be able to convert them, and it's not going to really cause any problems economically, because we know that there's the gold and everything that's backing the ZiG.
But
so what you're seeing is actually
the heavy-handedness.
Yeah, heavy-handedness.
I was going to talk about that. If you think about it, is this a currency backed by gold, or is it a currency backed by arrests and extrajudicious measures? And the rate remains stubborn at 18. Is there something that the market knows that we don't know? Because I'll be afraid to trade, frankly. And a lot of people now have their ZiG in the bank account and they're not trading because they're just so afraid to trade. And yet the rate remains stubborn at 18.
Yeah, and look, we are financial market players, and signaling is a big issue in financial markets. So what is very clear is the preferred way of ensuring that the price or the rate remains stable and that ZiG is acceptable is to use the police force, is to use the FIU, is to use other security organs. That does not speak to issuers, authorities that have got confidence that the economics should be able to
sustain the currency.
Rivaro,
Zimbabwe is not the first currency to launch a currency.
Means first country.
The first country, yeah. It's not the first country to actually launch a currency. We've seen numerous countries launch currencies or change notes. India has done so, Nigeria has done so. Many countries have gone through this. But this idea of arresting people and extrajudicious measures taken just to ensure that people use the currency. I mean, what's so unique about Zim? Why this energy around arresting people?
Well, look, our government has a long track record of wanting to control the economy. And, this is just, how they do things. And it's, in this particular instance, I think it's counterproductive. If the interbank market is a free market, then you shouldn't actually care where people are trading, right? Because, if it's a free market and there's currency available at 13.4, 13.5, eventually nobody's going to be willing to pay 18, right? Just the pure economic incentives will drive people to the formal banking sector because firstly, it's safer, right? You can actually have some comfort that, your transaction is going to go through as advertised, right? It's different from the power market. If your counterparty gets hit by a bus, that's it. That's it, right? You actually lose the entire principle that you're trading. Whereas if you're trading with a licensed commercial bank, if the bank manager has an accident, the bank is still going to be there the next day. So it's safer, it's easier, and if the currency in the formal banking sector is actually cheaper than on the power market, why would anybody?
So if I'm getting you correctly, you're saying this is just a knee-jerk reaction from a command economics, or people were just used to using force.
Look, I think it's just, if you look at historically how the government has behaved around these things, they're given to taking more control and command.
But we have a new governor.
He's not. Is he the one pushing for these arrests, or it's that it's other politicians who are making that case? And I think it doesn't make sense. The local currency should make an impact in the market based on its own merits, right? If it is legitimately backed by $185 million worth of gold, $100 million of currency, and it's interchangeable at 13.4. Eventually, common sense will tell every market player that it doesn't make sense to be paying 18 for something that you can get at 13.4, right? So, and I think the failure here, is with the banking system for not actually making US dollars available widely at 13.4, because if everybody understood that you could access
no one is willing to trade at that rate. People are willing to hold on to their US dollars. That's the other problem that we're having is people are not willing to get the ZiG. They're willing and happy to just keep their US dollars, which is quite concerning, because if the rate is at 18, the official rate is at 18, and the power market rate is at 18, and people still are holding on to their US dollars, it's a bit concerning. People don't trust the ZiG.
Yeah, you see, so trust was never going to miraculously emerge overnight after the announcement of ZiG, right? The only way that ZiG is going to engender trust is if it actually lives up to its claims, right? If you can walk into a bank with your ZiGs and say, listen, I need to pay this US dollar invoice, and it happens over and over, and that becomes everyone's lived experience, and you can access money at the official rate, then why would anybody trade on the power market?
Okay, so on that, Wheezy, could you play, on the issue of trust, Wheezy, could you play something that the Deputy Minister of Finance actually said in Parliament?
Honourable Speaker, allow me to highlight an issue that came up quite a few times that is of importance, and that is the issue of confidence. Indeed, our currency, the ZiG, needs to have the confidence of our people. How does the government, how does the Minister of Finance, how does the Reserve Bank gain the confidence of our people? Mr. Speaker, sir, that will be done by doing two things. Number one, doing the right thing, and number two, doing the right thing long enough and consistently. This is something that government has committed itself to.
Okay. So if you listen to what the Deputy Minister is actually saying of Finance, David Mnangagwa, and he's very eloquent, and he speaks about a currency, whether a currency is actually backed by trust and confidence or is backed by gold. It actually doesn't matter if it's backed by gold. What is important is, in the public's eye, does it have the trust and confidence, and a sustained trust and confidence, to use his words. Ranga, please speak to what the Deputy Minister is actually saying. This is something that we've continuously said. So these guys actually know that a currency is backed by trust and confidence.
Yeah. So so it's quite spot on, and certainly what any a market player would expect, that you need trust. The transacting public need to have confidence in the currency. They need to trust it, that it can be. It has got all the features and functionalities of money, that you won't lose value, and and you have to do it in a more sustainable way, which for me that was the key to his discussion, that we need to have stability and build trust over a long period of time and to sustain it, so that people don't wake up one day with changes that are going to sort of decimate whatever bank balances and wealth that they would have toiled for so many years. And it's actually surprising that from within one system, there is someone like the deputy minister here who is seeing things clearly, but on the other hand, there are probably someone who believes that the best way to go about it is to arrest everyone who is trading in the currency, is to make it a criminal offense for anyone that is using a rate which is above the official rate. It's actually counterproductive. And given that I haven't seen any evidence that maybe they've started printing, and given that they have said there's only $80 million worth of ZiG and all this, the gold and the currency which is backing them, they don't have to do that. They just have to ensure that all that is required right now are measures that demonstrate to the people that they actually trust the authorities, trust the policy measure that they have in place, and all that they were saying about gold and currency backing the ZiG is true, and they can demonstrate it on the marketplace
by acting,
not by any kind of threats. Obviously, that does not take away the fact that maybe we have got laws in the country, so where they are really criminal violations that have taken place, that are so wanton, that are of a scale that would warrant the law enforcers to be involved, then that's okay. It's part of our rule of law practice. But you can't be going onto the street and start picking everyone that you see, arresting them, beating them up, or something like that. I think they have to focus on the bigger picture, which is to cultivate, engender the trust. So you need the bankers to be on board. You need the industry to be on board.
You need the public.
You need the public to be on board. Assure them that look, we are partners in this thing. We'll go all the long way to try and ensure that this thing succeeds. If there are some compromises to be made, they have to be made by all the parties. No one is to be, okay, we have started afresh. We don't need to be pointing fingers and start blaming some other people. So we need to start from scratch as a team.
To gain that trust and confidence.
Exactly.
Rufaro, do you want to speak
Pass me a
to
call
what the David has actually articulated?
Yeah, look, I think, and we've seen this since, November 2017. We have, for the most part, been saying the right thing. Mm-hmm. Right? Unfortunately, we haven't always followed up saying the right thing with actually doing the right thing. And whether or not this currency succeeds is a function of not just what government officials say, but what they actually do. And, so far it's, what's happening on the parallel market speaks to the market not actually accepting, the new MPS, not believing that printing isn't happening. I think it's early days to call it, but it definitely has been an inauspicious start.
Well, to use your usual phrase, it hasn't passed the smell test.
Not yet, for sure.
Yeah. Okay. So continuing with this judicious measures to protect and to sustain this exchange rate and this new currency, the government came up with a new statutory instrument, 81A, and effectively dismantling the entire premise of ZiG and putting to effect a fixed exchange rate, where they say this is the exchange rate that you must trade. They call it the interbank market, but now retailers cannot trade beyond that. So previously they were given a 10% allowance, but if you think about it, it wasn't just a 10% allowance. A lot of retailers could go even beyond that. They had arrangements where they could charge an exchange rate that was way higher than the official interbank or auction exchange rate at the time. And then that allowed goods and services in the supermarkets, and they were competitively priced, especially US dollar compared to local currency. So now it's a crime to charge anything beyond the official exchange rate. What are your initial perceptions and remarks on this?
It's actually needless if you consider that right now probably 90% of the transactions are now in US dollars. So it justify muddying the waters just to protect the below 10% transaction that are still taking place in the local currency. I think that there was no need for that, and obviously it creates potentially a problem even for the retailers, where obviously they are fearing some arrests, they are fearing some sanctions, and the FIU will be on their case just because of to try and police something that has got a 10% probability in an economy where about 90% already is dollarized. I think it doesn't really come out well as something that is positive.
They're overplaying their hand.
They are certainly needlessly overplaying their hand. If it was a case where it's actually the ratio or the proportions are reversed, so 90% of the transactions are in ZiG, then maybe one would say, no, we want to protect the 90% that are transacted. I mean, we always talk about the velocity, but the bad vibe, how people that comes from that free to transact. It actually, they're willing to transact. Police just everything, whether it looks from an outside, but also because it's available as electronic money on your card, on EcoQuestion and other platforms, so you can transact. I think a typical shop right now is most likely to transact in USD than in ZiG. So I see
prices in US dollar are gonna go up.
Yes,
Faro, your views on this? What do you think will be the likely impact of this SI?
Yeah, look, it's just there's a lot not to like about SI 81A of 2024. So to start off, it's we're at the beginning of May, right? It's literally and we're on 81 statutory instruments, and the nature of these statutes is that they're temporary. They have to be renewed. They naturally expire after a short period of time. So firstly, we shouldn't be chopping and changing policies at this kind of clip where, on the 10th of May, you've already got more than 80 statutory instruments. It's that, so it just signals that we are carrying on in terms of policy inconsistency and chopping and changing. So at that level it's a problem, especially given that the government can actually, the party controlling government actually has a 2/3 majority in parliament. They can actually make laws. They don't have to issue statutory instruments using,
so again, to your point, this is a knee-jerk reaction.
Right.
This is just how they've done things, and they will continue to
do
it.
So it doesn't engender faith and confidence that we're constantly issuing these statutory instruments. And if we are saying that the interbank market is a free market, why can't the supermarkets price whichever way they like, right? Because if we know for a fact that a significant amount of the goods that we see on the shelves of supermarkets have import components, right? And if importers are able to legally access money through the formal banking sector at 13.4, right? If you price aggressively, if you decide for your shop that you're going to cost your imported products at a rate of 18 or 19 or 20.
You're pricing yourself out of the market.
You're going to price yourself out of the market because the person, the business, the retailer that wants to push volumes and have very high stock turnover is going to price much lower at closer to the official rate, right? And they're going to steal market share.
So what do you think is motivating this? Why are they doing this?
So my best guess is it's just the nature of our government to want to control everything. They have a natural deep distrust of markets because a laissez-faire-minded economist would understands that competition between the retailers would price the goods on the shelves properly, right? If importers are able to access money at 13.4, right? If your margin is too big, your stock won't move. You'll be priced out of the market.
Let's hear from the audience. What do you guys think? Rufaro used the word natural distrust. Is it a natural distrust that government has over markets? Why is there that distrust? And Rufaro terms it a natural distrust.
Well, if you look at where they're coming from ideologically, philosophically, right? This is the ruling party ideologically and philosophically is a Maoist party, right? And Mao was an ardent command and control. That was his philosophy in terms of how government should operate, and I think that's their natural instinct to want to control everything, right? Notwithstanding that, everywhere in the world, the data tells us that free markets outperform.
Let's hear from the audience and what you guys think. So, again, we stick with the retailers and the supermarkets and with Treasury. They also passed another SI where they increased IMTT. So this is the transaction tax. And it used to be 1% if it was US dollar, but now they've increased it to 2%. So if you think about it, that's now quite a significant amount. So every time money is moved, they're charging 2%. And every time US dollars are moved, they're charging 2%. What's your reading in this? Are they trying to dissuade people from using US dollars and going back to ZiG?
No,
or are they just trying to raise revenue?
I think it's just an effort to try and raise revenue. We know that the revenue base has been shrinking, and they're looking at this move towards USDs, the 90-10 that we're talking about, and they're thinking if we just increase, so doubling the number from 1 to 2%, it means that the revenue collected is going to increase by as much, but it doesn't necessarily follow like that kind of pattern, because by just doing that, there's quite a number of people that would be discouraged from transacting in US dollars on the formal market. And for US dollars, it's fairly easy. People just choose to transact in cash.
Okay.
So ordinarily, if you do where you would ordinarily say spend your $100, say 3-4 times, maybe buying whatever you're buying from a shop, it makes sense for you to be just withdrawing it from your bank. You are charged 2% just for that transaction, but for the subsequent transactions that you are doing using USD, then you don't incur that cost. So basically, they are informalizing. They're encouraging informalization.
Because it's not there. So sticking with that, there was an article in the Business Herald, which I thought was very curious, because you talk about the 90-10 rule, that the market is 90% US dollars and 10% ZiG. But there's this argument that they've made in this case, saying business is struggling to actually get Forex for imports. So you might have the nostros. You go to your bank and you want US dollars, you want to import, you can't get it. Then the second bit is where you actually do have the ZiG in your bank account and you're trying to get currency and you can't get currency.
So that's That's one of the problems that we have. You might have a balance that says $40 in your accounts. Ordinarily, you should be able to transact, isn't it? And if you are not transacting, that just tells you that that money is not there, or it's not there in the form that you are expecting. And it actually feeds into the worry and speculation that as time goes on, actually the value of ZiG is going to be debased. I think there's no better way of sort of supporting argument by just pulling those kind of stats where, you know, someone can actually get foreign currency. If you speak to the banks right now, in fact, there are some people that might have facilities with banks, and quite a number of them will tell you that drawdowns have been very difficult. So it just tells you that even the nostrils are not there, and even when they are available, it's when you try and
it's being rationed.
Yeah, it's being rationed, but also even try to transact to do an offshore payments from your nostril, it creates problems. This probably explains why most people still prefer to be in holding on to US dollar cash under the mattresses, in safe deposit facilities, or in whatever kind of source, because clearly whatever might look like US dollars today and it's under the control of the monetary authorities, you are not quite sure whether you'll
what's
be
going to
able to
happen.
access it.
So, Rivara, I want us to, because you said something that was actually very, very interesting, that it feels like we are turning back the hands of time and we're stuck in East Germany, and this is pre the fall of the Berlin Wall. The Berlin Wall has fallen. What could we do? What could you say directly to the policymaker? That, okay, you are naturally predisposed to hate the markets and to trust command economics, but the world has moved on. Berlin Wall has fallen. Even Russia is not Stalin Russia. Even China is not Mao China, and yet we're still stuck with Mao and Stalin. What would you say directly to them so that they're more amenable? Because we saw a young deputy minister of finance who's speaking our language. He's talking about trust and confidence. He's talking about sustained trust and confidence. What could you say to help his cause, to help his argument, so that these people who are naturally predisposed to socialism understand that markets do work?
Yeah, well, I would encourage them to look at history, in particular, a country that our government loves to talk about as a rising power and as a roaring success story, which is China itself, right? This is the place that Maoism was born, and you had Mao ran the place from 1949 until he died, and we have the results of that tenure, right? It was awful. Tens of millions of Chinese people died in famine. The economy hardly grew. The outcomes were awful. And then you had a reformer come in 1978 in Deng, and for 30 plus years, China had double-digit growth consecutively, right? And it went from being, an undeveloped, poor country to being a developed country. So and we talk about the Chinese miracle. So we like to look to the East. Let's actually really look at what happened in the East and learn from that. Because in as much as the ruling party in China is called a communist party, it's embraced free market
reforms,
free market capitalism a lot. And I think and as long as we don't do that here, we're going to continue to suffer from all the problems that we're suffering from.
Yeah, I concur. So I want to talk about something about exports, because we need to be encouraging exports, right? And what's actually now happening is for every dollar of export that you put across, you've got a surrender requirement of 25% that's going to government and the RBZ. But we're reading from the reports that even the current exports, 25% will be taken, but you will get your ZiG in a year's time. So it will be converted into an NNCD that you'll be paid out in a year's time. So effectively, you're exporting $1 today, but you're only getting 75% of the dollar, and then 25 cents, you will get it in a year's time. Do you think that's fair? Do you think that's real? Or is the governor just trying to test the market to see if that will bite?
Punishing them? But that sounds like punishment.
It does.
Yeah, and also even in the history of our financial markets, NNCDs have always been used as punishment. So you have got you've got excess cash on a balance sheet, and central bank will take it, sweep it into the NNCD as a way, as open market operation way of managing the liquidity. And we've seen that it's tended to be used to sort of it's not an incentive.
Mm-hmm.
Yeah, it's not an incentive, and it's actually.
So can we speak directly to the governor so that this doesn't see the light of day? I mean, CZI, again, it's been reported, CZI is complaining about the auction, that the money that was on the backlog is going to be pushed again into a 2-year NNCD, and CZI's constituent body, they are actually arguing that this was their working capital, and it being pushed 2 years on, it's going to hurt business.
I think it's actually a very subtle, soft expropriation in a way, because the owner of that asset is not able to use it when they want to use it, and it's a very difficult one, especially like you in your preamble, you're saying we are trying to encourage exporting in this country. And fine, I would sort of understand the idea of saying, okay, please convert 25% of your export proceeds, maybe you want to use them internally. But when they've done that, allow them to use their money. It's their money. You see, it has to rank in equal measure to the 75% that they still have. But this is money on their balance sheet, and it's actually quite counterproductive, because we know that we are a country that tries to attract investment in, and whenever we are talking to foreigners, we're saying we can give them incentives, but here we are actually disincentivizing the exporters that we have. And I doubt with the little that I know about the new governor, that is probably something that he will allow to happen.
Because it's another tax, if you think about it. So it's a punishment, and it's a tax.
It's a tax.
And it's
actually it can only discourage companies to export and to declare the exports honestly, because the moment you do that, you will get penalized for that. And the question is, so when this money is taken, who is going to be, how is it going to be allocated, applied, etc.? Are we not better off just pivoting straight to the market, so that if there is any importer who is looking to get some foreign currency, they should get it from the market, and if the rate of 13.5 can hold, then they should be able to get it at that or at any other rate which is there. We can't be punishing exporters to benefit importers.
Absolutely.
It doesn't make
There's
sense.
an argument that a lot of people make, and again, we come to our philosopher today. Today, you're very philosophical, so
I'm always philosophical.
This one, you love this one, and I can't wait to hear your answer to this one. So there's an argument. So Ranga has correctly identified that we sort of punish the exporter and we promote the importer. Now, there's an argument that's made that actually since 1965, what the Rhodesian government did was to make industry, the structure of industry, to become more an import substitution industry. So we've always favored importers rather than exporters. And that mindset hasn't changed. That's why the knee-jerk reaction, whether it's auction or whether it's surrender or whatever policy we've had, always favors importers and never exporters. What's your philosophical analysis of that?
Well, I'm not sure in this particular instance that this change favors importers, because by basically giving the exporter an
government
NCD,
is the importer.
yeah, okay, it favors government, not necessarily importers. And again, it speaks to a very prescriptive mindset, where the state is basically telling the market that it knows better than the market what's good for the market, how capital should be allocated, how foreign currency should be allocated, whereas most successful economies, the market actually answers these questions. And we've done this before. We've seen this movie or a variant of it many times before. It doesn't work. This is a huge disincentive to exporters. And if you actually think about, especially from a mining perspective, right? The capital outlays involved in mining are quite big. And, when somebody's making a capital allocation decision, around a mining project, they're usually thinking in terms of decades, right? The payback period is not 2 years or 3 years or 5 years. It's 10 years, it's 15 years, 20 years. And they make all these assumptions about, what they think is going to happen to commodity prices. But they also look at the regulatory environment, what royalties are you paying? What is the retention? What is the, what are your income taxes? And all of that gets fed into the model. So if you wake up one day and then you decide that not only, because the 25% retention is not new, right? What's new is that you're going to be out of pocket for a year, right? So every mining house is, the treasurer or finance director now has to grapple with having 25% less
revenue,
working capital, right? Or not being able to access 25% of their exports, right? Because it's one thing to say you have to convert them to local currency. I think Ranga was too kind by calling it soft expropriation. It's literally the state going to all the exporters and saying, "Hey guys, we're going to borrow 25% of your revenue for a year. Thanks." You don't.
You have no say.
You have no say in this. You have no say in and you can't. And what perplexes me as well is it's not negotiable, right? So if there's somebody else in the market who's actually got liquidity, who is quite happy to hold a government instrument that's paying 7.5% for a year, they can't actually help you out, right? They can't say, "Hey, Tinashe, you know what? You've got this NNCD. I've got all this liquidity. Let's transact." So they're literally saying you have no access to this value for at least a year, and we don't know what's going to happen in a year. They can roll that NNCD forward for another year.
Well, we don't even know what inflation will be in a year's time. Ranga, because we need to wrap this up, let's talk about QPDs. There's this argument that the June QPDs, we're expecting about 200, 300 million to be paid to Zimra, to government, and in ZiG, and there's not enough ZiG. What's going to happen? What do you think is going to happen there? So the argument is that's when the ZiG will gain value during that period. So they're just waiting until then, because everybody will be looking for ZiG and there won't be enough ZiG. Never mind that they've taken your ZiG and they're going to give you back to you in a year's time. They won't care, but they will just say, "We want our ZiG." What do you think is going to happen?
So we are saying 300 million, and we know that they are only about 80 million.
80 million worth of ZiG. Give or take, government has actually been printing civil servant salaries. So by the time we get to June, July, call it 150 million worth of ZiG. But there is a requirement for about 300 million worth of ZiG.
So obviously, practically, it means you can the payments, are they going to be only to the maximum amount possible in ZiG, right? And obviously it's not all of it that's going to be available to whoever has got a tax obligation.
Absolutely.
Even if they decide to say they want to buy USDs ZiG at 1-to-1,
They just won't be enough.
they just won't be enough. So what we are creating a crisis so that to do what?
We print ZiG.
And the moment you do that, then it means again, after that sort of incident, do you think the market will be more confident about ZiG or not?
Well, less confident, because also remember, ZiG is just moving from the private sector to Zimra, and then once it moves to Zimra, it goes to government, and government will release the same ZiG to suppliers. So it's not like this money is going to the central bank where it will be immunized. No, it's just moving from private players.
Did you just say immunized?
That never happens. Well, that never happens.
Where did you get that? Where did you get that jargon of immunizing money?
Well, that's what central bank must do.
Must immunize money.
Yeah, it must immunize the ZiG. But we know that they never do that. But if money goes to Zimra, eventually it's spent and it comes back into the market. So it doesn't matter. You're actually punishing private sector, but the money will eventually again come back to the same market. So I don't understand the thinking there.
Yeah, look,
And it's not like
it is this kind of policies that will just perpetuate the difficulties that we have. So we all know they are collecting 90% of their revenue in USDs, and you expect
about 60%, 60-70%.
no, not government.
Okay.
I mean,
you mean private
it's
sector?
the private sector, right?
Yeah, that's true.
But you are expecting them to pay most of 50%. They say 50%.
50%.
50% of their tax in ZiG. Simply because you think that will create a demand for the Zimbabwean dollar. But it's actually
ZiG, it's not Zimbabwean dollar.
Well, whatever. ZiG. That's actually going against the spirit that the deputy minister was talking about, like trust and sustainability. Yeah, so you are not engendering any trust on the Zim dollar, and even that knee-jerk whatever policy measure is not sustainable. And I think there's still a lot of room, a lot of time for Treasury and central bank to really look at these things and say, what exactly are we trying to achieve? You can't punish the private sector for a crisis that they've not...
That you created.
Yes.
Do you want to, before we wrap up, do you want to speak on QPDs? Do you have another philosophical...
Maybe before he gets into the...
Okay.
What do you guys think of my hair? I see Rufaro here has gotten into...
Yeah, I quite like it.
I was going to ask, how's it possible that you're having my hair and whiskey at the center and water?
No, I'm not. No, the water is going into the whiskey.
And did you realize that of the three of us, is the only guy who's gone into the second bottle?
Yeah,
of my hair.
I'm not just claiming that I like it. You can tell from my actions that I actually quite like it. Yeah, no, I think I think it's pretty good.
Well done to Durwood.
Yeah. So look, I think at the end of the day, like if we have to think about this philosophically, right? Ranga alluded to the split 90-10 between US dollars and the local currency, the ZiG, right? How did we get there at that 90-10 split? Because the local currency certainly 2, 3, 4 years ago had much more market share, right? Why are we here where we are today, where the local currency has so little market share, right? Because the state and the central bank took a set of actions that basically destroyed the local currency's market share, and this is that's how we've ended up where we are today. And I would, if I was to make a case to the central bank and treasury, you have to woo the market to increase that market share. If you want the market share of the local currency of ZiG to improve, right? If you want it, if this time next year to be at 30% or 50%, right? If the plan is by 2030, when the multi-currency regime is supposed to expire, that the local currency has so much market share, nobody cares about US dollars anymore. You have to woo the market. You can't whip the market into
submission
into using more ZiG, right? The market, you must, it must gravitate towards using ZiG naturally, because it makes more sense, because the average person on the street believes they're better off transacting in ZiG than in US dollars. So that's a hard ask, right? But your primary tool to get us there must be persuasion, not coercion. Coercion will fail miserably. So that's the message that I would put out there. That your primary tool must be persuasion. Decree and trying to whip the market into line. It's never worked anywhere in the world, and it's not going to start here.
And since it's an economic question, private business players must be partners in this thing, right? So you're talking about the currency. They are the ones who are at the sort of coalface. They are receiving this currency and exchanging it for their goods and services. So you want them on board. It's a new currency, so there's no way that you could even accuse them of having some...
Yeah, business want to make money.
They want to make money.
They're not interested.
Yes, they want to make money. And I think to them, there's a local currency is actually more likely to drive sales than USDs, because why? I mean, you always talk about the velocity of money, how people are just free to transact. They're willing to transact using the local currency, maybe whether it's to get rid of it, but also because it's available as electronic money on your card, on EcoQuest and other platforms, so you can transact easily as opposed to the Zim dollar. So if there is a section of the economy that's really would are hoping for ZiG, the success of ZiG, it's actually the business players, but that's where their money is. Yeah, so to then come up with policies that clearly government is not consulted with them, but they are actually trying to hit them hard, trying to punish them for something that they've not created. I think it's actually counterproductive on the part of the authorities. So there's no need for that.
You remind me of Busisa's argument. All right. Ladies and gentlemen, on that note, very wise words from Ranga and Rufaro. Please continue to share your comments and understand that what we are trying to do is advocacy in some way, speaking directly to the policymakers, speaking directly to business, and speaking directly to the public. We want to see a successful Zimbabwe. And for us to do so, we have to, and I will use the Deputy Finance Minister's words, David Mnangagwa, which is a sustained trust and confidence. We have to have that. And if we do that, then I think monetary system will be safe, our fiscal system will be safe, and we will have ourselves a prosperous nation. Before that, what we will do is have our fuko yemaheu, and it's delicious. I'm looking forward to having this, even for dinner, actually. Yeah. So, cheers. Yeah, tell us what you guys think.
Cheers.
Yeah. Cheers.